Thank you for joining me today. My name is Lindsey. I'm a CEO and owner of Hawkeye Traders. I'm going to go through and talk to you about market direction using volume and price. It's one of the key elements that we do as a volume trading company. Everything that we do is based on volume. We look at volume and price, and we try to help you as a trader understand the relationship, and we focus on that aspect. We try to go side by side, hand in hand with all of our traders to make sure that they are successful, because I cannot say that I'm successful until our students say that they are successful, and only then do I have anything to boast about. So let's go on and make sure that you understand and know that there is a large amount of risk trading in these markets: forex, futures, stock, options, cryptocurrencies. There's also a large potential for reward, but make sure you understand what the risks are, that losses will and can occur in these markets. So make sure you understand them, and make sure you use wise advice from competent financial advisors before you start risking money in these markets. I want to introduce you to volume. I want to tell you why volume is so important. I'm going to go through the opening price principle and show you what the concept is. I'm going to teach you about volume price analysis and how that term is coined, and I'm going to go through actual market examples to show you how volume is used in the market and Hawkeye's perspective of that. Now, normally we would wait until the end of the presentation to show you or let you see any free offer, but I want to get that up front. You don't have to wait for anything. This is the offer right here. I'm going to be showing a lot of indicators and a lot of things when we go through these market examples live. So I want you to be able to use them yourself. So if you go to that link, click in free trial sub as a promo code, you'll get full access to the Hawkeye Professional Package. That's everything that we sell, and I'm going to show you today, absolutely free for 14 days. So make sure that you click the link and use this promo code to do that. But in the meantime, I'm going to be going through my presentation, so I want you to be able to follow along with me if you don't get that done and set up. Okay, so traditional trading, between 70 and 80% of traders are failing. That's a well-known fact. A lot of people will say up to 90% of people are trading, and there's good reason for that, because many times 70 to 80% of traders are using traditional trading strategies. They're using either MACDs, stochastic, Bollinger Bands, Elliott waves. Those are just a few of the more popular ones. You've got trend lines and you've got averages, moving averages. Those are very, very popular. And if those are as popular as they are, and if the majority of those people are failing, it's got to say something about those type of indicators. Okay, so it's something to consider. I'm looking at any of these types of indicators. If you compare it to volume, then if you understand that volume is important, it's the only leading indicator. What volume does is it signals price movement before it actually happens, and it gives you the market intent. It identifies and opens up for you windows of opportunity, which you really never saw until after the fact. Anybody can come in and after price has moved, look back and be an expert. However, if you know ahead of time what's going to be happening, if you can see where the market structure is right now, that's going to help you to become a much more confident and successful trader. Okay. All of the indicators by comparison are lagging because it does not give you the information that you need to get started on that. So volume is the key. Volume on triple time frames really is the foundation that we want to look at. And we'll go through that in more detail in just a little bit. For me, I was an avid trader. So all through the 90s, I traded part-time for my job, and I made plenty of money. I made enough money to buy a house, pay off all my debt. But at the same time, I really wasn't prepared. I was like anybody else. In the late 90s, everything that you bought went up, especially if you were technology based. So I got a little bit lazy. I blew up several trading accounts. I started following every Tom, Dick, and Harry out there because I lost confidence in myself. I thought I could make a trade. I can do this. And I couldn't because I was just haphazard. Actually, I was just lucky. I was on the right side at the right time. But when the wrong side came, I was on the wrong side. And that hurt. So because of that, I was very inconsistent in all what I was doing. But I learned a valuable lesson from what I did. Losses are the most valuable teacher you have. You should always, always learn from your losses, always, because losses are the best teacher. So even the best traders are going to take losses, and that's okay, because the best traders are going to get better because they have learned to learn from their they've learned to learn from their losses. So I was introduced to Hawkeye traders about 2005. Just like you, I came to a webinar. Someone was showing me how volume helped them, showed me the information about how to trade with volume and price, and that completely opened up my eyes to trading. Whereas to that point, I was trading, I was not being consistently profitable. I was break even most of the time. But once I started learning about volume and price and the secrets of volume, then I found the missing link, and that missing link was volume. I really only thought it was a single colored little thing on the bottom of my chart that went up and down all the time. Okay, there's a lot of volume. Okay, volume, people talked about it all the time, but it never made any sense to me. I never saw that as something I can learn from. Well, let's learn a little bit more about volume, and maybe you can see for the first time the significance of volume in your trading. Volume spread analysis, VSA, is a term that's been coined to describe analyzing volume over a price bar. So you're looking at the distribution of volume on any particular price bar, whether it be a daily bar, an hourly bar, a 1 minute bar. You're looking at the volume as it evolves over that price bar. Standard VSA does not consider the open. It only considers the high, low, and the close of the bar. Hawkeye and our suite of software tools considers the open as paramount. And I'll tell you why, because it's very similar to an auction. If you go to an auction, prices are bid up, the bidder stands up and starts saying, can I get $100 for this antique? Someone raises their paddle finally when he gets down to $40. So that sets the opening price. Someone starts bidding at 40, price will maybe settle at about $45, $50 at the most. It's very different when the guy gets up to the front and starts saying, can I get a bid? And someone instantly raises their paddle and you get a bid at starting right at $100. Price could even skyrocket up to $130, even $140 before trading is over. So you can see that the opening price is important because what it does, it sets the basis for the session. It's a very, very important key concept to understand when you're analyzing price, and when you're considering volume with that, it helps you to see that and to understand it a little bit better. Okay, so here's a little diagram I want to go through with it. What we're looking at is volume price analysis is the introduction of volume spread analysis, where you're looking at the spread of the volume over the open and high. Usually it's compared to the close of price because you're always tracking the close, but no one really looks at the open. So when you see the open and you see that price has traded down from that open, where you see the distribution of volume is holding in the lower part of that price bar, it's very easy to see that that volume is down pressure. Okay, you've got pressure, selling pressure on that bar. So it makes it very easy to take into account the relationship. So when you look at the open, high, low range, and the close relative to the analysis of that spread, it gives you a very accurate profile. Is there buying pressure? So is that close? That close can even be less than, but if the distribution of volume is in the upper part of that bar, you're going to get a lot more buying, and that will be color-coded green if it were buying pressure. If it were red, it's the selling pressure. If we color code this as white, Hawkeye says that there is a normal distribution. So the volume over that bar is very evenly distributed. Your open and close are very close to each other, or they're very close to the middle of the price bar. There's usually no demand on price to go one direction or the other. So we call those neutral volume bars. So you got neutral price, you got aggressive buying or aggressive selling pressure. Those are all given by unique color codes, very simple to Hawkeye. So red, green, and blue. I'm sorry, I said blue, but white, red, green, and white. So what volume price analysis is a culmination of over 20 years of research, and it's more of a sophisticated way of trading. more like forensic analysis than technical analysis, because what we're doing is we're digging deep into the data to analyze it. We are segmenting the volume. We're looking at it in chunks of 5 bars over a period of 15. We're analyzing each one of those relative to each other, and we're determining the trend and the pressure that's being placed on the market right now. And volume, when the market makers and the buyers and sellers are out there putting pressure, we want to know where price is going to go right now. We don't want to wait until 15 minutes later or 30 minutes later. We want to know right now. And volume enables you to see that and to help you to see your trades more clearly. It helps you to perceive the market structure of the chart because you can see the intent of where price is going to be going. It shows you and teaches you how to place your trades, how to keep the profits that you make, how to protect your positions, because you see where the market is going. You see where support and resistance has been or is, because that's where all of the pressure comes from. Okay, so support and resistance levels are all purely defined by these volume levels. Okay, so let's go through a very quick example, and then I'll go to some live charts, because I want you to be able to see that. Has everyone had a chance to go to the link to see if they can download and start installing their software? I want to make sure that you have access to this as well. It's the first time I've ever done this, so I want to make it available to everyone that's here. When you look at a chart, any chart, I just picked an S&P 500 here. Volume is displayed on the price bar. It's using our volume paint bar. Volume is also displayed under the price. Okay, so you can see a large volume bar on the open of the market. That's very common. You'll see the opening of the market is usually where most of the activity, all the pent up volume overnight comes in, all orders are all filled first thing in the morning. So you'll usually always see a large volume thrust on the open and a large volume thrust on the close. So that's very common to see. But what occurs after that, and that opening price helps you to determine the session. Okay, so you're looking at this session right here. You can see that price opened right where price was trailing right up into that. Price came right into and opened. Okay, pushed up strong. You can see there's a lot of buyers that came in, pinned up in there. Okay, the second price bar you can see pushed up and was able to go high and came down low. You can see the high is greater than, the close is greater than the open, but the bar is still painted red, because what volume price analysis is showing you is that this is a weak bar if you're looking at price trying to push up. Okay, most of the volume in there is selling volume, all occurred in the lower 40% of that price bar. So this is a highly skewed distribution of volume on that price bar. We made it simple to say, this is a volume price extension on opposing trend. So we've got opposing volume coming in on a trend direction. It's trying to push up. You got market makers that are trying to capture retail sellers on false breakouts, and the price is going to come back down pretty quickly. And that's exactly what happened on the next bar. You have another volume bar coming in, pulling that back down. But notice how the volume is starting to decline. If this really were a big volume move, I would expect to see that these price bars are going to be at least as big as the previous one, and the volume bars I would want to see rising. Rising, absolutely. Michael, you missed the free trial sub subscription here. Free trial sub. Enter that in the promo code. Enter that as a promo code. You'll get it absolutely free. All right, so you can see this. This is like a big red thumb sticking out saying, I do not want to go this direction. Okay, this is like a big stop sign. Okay, it's telling you market wants to go down, and that's exactly what it is. It corrects down, but where does it correct back down to? Right back into the open. Okay, market's trying to push down into that open, but volume is saying, no, I'm sorry guys, there's just not enough here really to do this. This is not responsive. If you see a large price bar with less than average volume, price is not going to continue to go down. Price does go down a little bit more, okay, on very weak volume, but look what happens. You have about average volume starting to come in buying, and look what the response of price to that bar is. Okay, that's responsive buying. Okay, that says, okay, this is a great, because price has also created and dipped down and made a brand new low right here, and then it pulled right back up very quickly. An engulfing bar with slightly greater than average volume is very bullish, and you want to be long in a market that's bullish, obviously. Okay, this is a correction, this is a turn, because it's responsive buying. Price came right back down, okay. Sellers, where are the sellers? Red, red, red. Price came down slightly. All right, there's a little doji. Okay, nothing's there. But when volume starts to come back in, you get very responsive buying and you're off to the races. Okay, so what you're looking for is the opening volume. It sets the stage. You're looking for any type of a reversal signal that tries to get liquidity and pull the price down into a range that will make it attractive to the buyers. It'll make the retail traders think the market's going down, but what they're really trying to do is get it to a point that makes it very attractive for them to create positions on the long side. And that's exactly what the market wanted in this case. Market went up and it stayed up and it went strong the rest of the day, and it closed out strong, ready for the next day to go in. Okay, so that's one example of what volume does for you. Chris wants to know, does it work on 1 minute bars? Absolutely. It'll work on, this is a 6 minute bar. It'll work on 3 minute, 1 minute, 5, 15, 30, 60, daily, weekly, monthly. Tick charts, range bars, Renko bars, you name it. All right, so let's go through some live chart examples real quick just to see what we've got going. And make sure that you click on the link to go to the trial. It's the HawkeyeTraders.com/trial. All right, let me see if I can get that there. Copy, and I'll paste that right there in the chat. There it is. All right, I'll send that to everybody. I only send it to the organizers, and send that to the entire audience. There you go. Now you click on that link and it'll take you to that trial that we can get your subscription. Don't forget to include the free trial sub promo code to get your full 0 discount. All right. So I'll start off with some trading view charts here. Volume, this is the volume starter package. The volume, again, shows you exactly what we're looking for. So this is the live edge of the market on the Australian US dollar. Just what I was showing you before. You're looking for signs where the market is coming from. So let's look back in time really quick just to see. What do you see in volume? If you look back on volume, this is a 15-minute time frame chart. What do you see? Give me some answers. What do you see on volume here? Is there any of my students out there that can tell me this answer? Okay, I see a lot of spikes. Yeah, it's kind of spiky. What's predominant here that you see? What predominant? What can you learn from this chart? There's not much here. It's volume and price, and that's it. Okay, I see some spikes of buying volume. That's right, Keith. Yep, Chris, Nahito. Oh, my students are coming out now, aren't they? That's right. Who's in charge of this market? Buyers are in charge, right? The predominant buyers are in charge of this market. You've got some selling interest, but it's not where the control is. But you do have sellers starting to come in towards the end of this market that is trying to move the market into their direction. But when the time comes, we can see that buyers are in control and sellers are playing a minor corrective role. So that's what you're always going to be looking at on the price of these. So when you see price coming down to these levels, okay, you get a huge amount. Look, there's a price bar, volume extension coming right back down again. See that big green price bar coming right back down? There it is. That's saying the price is not going to go in that direction anymore. It's going to turn around. What does it do? Okay, it comes right back up. It tests it, it validates it. You have a stop hunt, very traditional. Notice the stop is here on both of those bars, but price creates brand new lows. These are fake outs, and all it's doing is looking for liquidity. So the buyers are going to step right back in. Then you have very nice, even controlled buying coming into this. And there's a nice, huge surge of buying coming up into the highs. It starts to peak. And what do you see right here? Okay. Again, you see price trying to push up, but coming back down very quick. Price trying to push up, but coming back down very quick. Then you see there's consolidation, there's sideways action, there's accumulation distribution going on, and then you get a break. You get a breakdown with responsive selling. Okay, remember what I told you earlier about responsive buying and selling? When price starts to go up on very small volume, there's really not a lot of pressure there. But when price starts to go down and you see an increase in selling, okay, that's going to be attractive to sellers. So this is now a downward moving market. So the price culminates right down in this point, and then you've got another little marker right there. What's volume sitting there trying to tell you? Okay. That's right. Volume's trying to tell you that this downward direction is done. Very much like a ship. It may take a little bit for that ship to turn, but where are all the buyers? The price pushes back down, closes right back up again. Okay. There's a lot of neutral buying there, but the sellers have gone. The buyers have come back in again. Okay. Here's selling pressure. There's selling pressure. There's a selling pressure. Here's the buying, buying, buying. So it's clear to see and understand from the charts that volume is trying to tell you where it's going. Okay, here, do you see any volume coming in here that's telling you that this move is over? Hmm? No, nope, you don't. You don't. You see some right back here. Here's a price bar came back in, price came right back up and failed. Price came back down again, came right back up and failed. So here you've got confirmation that the sellers are trying to reverse this market and they failed. So keeping an eye on price relative to the price bar gives you very clear intent of where that market's going to go. If I were short this market, okay, and I saw a price bar that came in that gave me a brand new low on larger than average volume, then I would take profits in that trade. Okay, this price bar was larger than average volume but did not create new lows. This price bar was less than average volume, would not done it. This price bar is right at average volume, so that could have been a take profit point for me. This price bar, less than average volume. This price bar, less than average. No, that was greater than average right there. This would have been another profit take for me. Okay. This right here, we're double bottom. We have not created any new lows. You got ultra low volume, ultra low volume. So right now we're looking at the sellers are in full control and buyers are still sitting there waiting. That's 15-minute Australian dollar. We can do this on any of the other markets. I'll be glad to analyze any market you give me if you post those in, but you can apply the same analysis. This is the same tool, but here it's applied on a stock called Apple. Does anybody know what Apple is? Of course, it's only the largest traded stock in the United States. Okay, so what this is the Hawkeye Professional Package. We've taken the volume. You can see all the price bars are colored with volume. You can see here's the Hawkeye volume, but we've added to it all of the other tools. Here we've got the Hawkeye trend showing the strength of the price is strong enough to cause it to go in an uptrend. So we color code the trend green if it's an uptrend, red if it's a downtrend, or white if it's a neutral congested trend. You don't want to trade in congestion. You always want to be in the direction of the market. When you see selling coming in, you're taking profits or you're getting out of the trade. When you see buying coming back in, you're reestablishing new positions. That's just what it does. We color code these because we want you to easily be able to see that volume leads any type of a move. So when you see volume coming in, prior to an initiation of a trend, you know that the direction of the trade will be in favor of that. All right, so SPY, look at the spider. All right, there's some spider charts. I'm looking at the same information, uptrend, consolidation. You've got three tops here trying to peak out. Pivots are telling you that you're expecting 3 to 5 price bars of reversal following that. So the pivot there, These are all tools that we've developed based on volume that are showing you that short-term or long-term correction in price are going to occur. All right, when that downtrend is broken and you start to create new lows, you can see that a trend change occurs and you start to go right back into sideways motion. There's not a lot of volume pushing that. You've still got an awful lot of upward volume coming into this market open, so but not right now. It's just not doing a lot. I particularly like the longer term charts, so looking at daily is a much nicer perspective on my part. It helps me to see things a little more clearly and helps me to get a better perspective. So you can see longer term that we are just coming out. So this is a breakout up into prior highs, which were signaled that weakness was coming ahead of time. So volume is always going to be here to signal that the weakness in these events are here, and you need to make sure that what you're trading is going to be in line with that. And right now we are on a brand new push up. Existing volume is pushing to the north, and you want to make sure that you're in long in these markets. So anytime the daily S&P or the spider is long, then that's when I'm looking to go bullish on any stock. If this starts to turn short, then I'm not long on any of my stocks any longer. So I use that as a very good barometer to help me to use that in my trading. If you're an options trader, then this is phenomenal because we've got several tools that make options trading so simple and easy to use. So let me go back to the same 5 minutes. So looking at volume on triple time frames, we have a method that's called the 3-step entry exit method. And so what we do is we look at the fastest time frame chart, we compare it to the second fastest chart, and we compare that to the third. Okay, so let me pull up another platform here real quick. Let's see, that's Bitcoin. Just wanted to show you that it works on whatever market that you're looking at. Fat Boy shows us whether we're overbought, oversold. We're looking at a decorrelation of the market. We're also looking at consolidation and trend channels. So when you're seeing markets that are coming up and starting to trend, you can see the relationship relative to the others. Very valuable tool and very helpful. But let me take that down. Let me pull up my other platforms here. Okay, here's the MT4 platform showing Forex markets again. I want to make sure and pull these out, but pull up my tools, trend volume. We have another unique tool called the Fat Man, which is a strength meter and helps you to see where the strongest or weakest currency pairs are in the market. All right, so whether you're trading Forex or futures, it's allowing you to see what the strength of individual pairs are. When you see a downward trend, it's always shown by red. Okay, uptrends are green. So when you see the overall trend direction, like you see on the hourly chart, then you can see volume came up, created brand new highs. What are we looking at here? Selling, larger than average selling volume coming up, trying to find retail trap traders and rip their faces off, and then it's going to go off to the races. It will revalidate and test the break point always, and then it will continue back down into these things. So anytime you have these current breaks of support and resistance levels, you will always find price coming back to retest these levels and to make sure that they are valid, because we know as traders that prior support will become current resistance, and prior resistance becomes current support. So anytime support is broken, it becomes resistance. Support, broken, resistance, and off to the races. Okay, so it's very clear and easy to understand and to know. If you know volume and you couple that with the rest of the Hawkeye tools, then it makes it easy as 1, 2, 3 to take these trades. So I want to make sure that you see that and you apply it to your charts. We also have another tool that helps us to manage our trades as well. So when you're looking at risk reward and how much risk that you put into a trade, then you can define that by the tools that allow you to identify the constantly changing average true range of a price and give you a profit target, which is relative to a risk value. Okay, that sets us apart from a lot of traders, because you never want to risk more than a certain percentage of your account anyway. You always want to have money to trade tomorrow. So you're looking at risk, then you're looking at profit take, profit take, profit take. That's 1, 2, and 3. But if you are a standard risk reward taker, then you're going to be looking for a 3, 5, or 7 risk reward for every risk that you put. That's the profit that you're going to try to take out of that market. That's the kind of trader that you want to be. That's the kind of trader Hawkeye traders are, because they're always looking to put themselves in front of the highest probability trade, and you want to make sure that the risk is as low as possible. Okay, we teach you how to do that. 3-step entry exit method. You're looking for the fastest time frame. You correlate that with the second fastest time frame, which is shown by the Hawkeye Roadkill. The Roadkill is a tool which shows you the longer time frame trend and the longer time frame volume. You can see longer time frame volume is agreeing with the shorter time frame volume, and you can see that at this point you are about 3 to 5, maybe even 7 price bars ahead of time. You're already knowing ahead of this move where price is going because volume is already leading the way. And what the Roadkill does is it puts this big signal right here that tells you second time frame has aligned with the first time frame. If you are an aggressive trader, then this one's right here is telling you that second time frame is aligning with the first time frame a little bit earlier. But if you're more conservative, then you wait for the alignment to occur when everything is in your favor. When volume is red, direction is red, third time frame. Here's the third time frame. You can see the third time frame has already been in along a short trend for quite some time. And what you're looking for is the return of the faster time frame to that longer time frame trend. Boom, that's when you get a roadkill signal that tells you that's where you're going to get acceleration of the trend because it's returning to the original trend direction. Anything that's counter to the original trend, the longer term trend, is just simply going to be corrective. So those are going to be small corrective moves. Don't take them. Short moves, you're going to take those. Long moves, don't take them. Short moves, you're going to take them. So anytime you see the trade going in that direction until volume says otherwise, you're going to take that trade. It gives you it's a much better way to trade. You're much more confident. It's going to help you as a trader take the moves that you need to take when you need to take them. Absolutely. Okay, so I've gone through these examples very quickly. I want to make sure that you see and understand what the offer is, and then I'll go right back to questions and to make sure that you understand everything, and then I'll show go back to live charts again, so that way you'll be able to see everything. Corinne, I can pull up the S&P 500 for you, no problem. The ES mini chart. Do you want to see that on NinjaTrader or TradeStation? Just a question. I can pull it up on either one. I can pull it up on TradingView. I cannot pull it up on my MetaTrader 4 platform though. All right, so if you take activation on this, you can see that you get the full professional package. So that's everything that I've shown you on these charts. You get the full trend, volume, roadkill, heat map, stops, pivots, wide bars, the fat man, the fat boy, the kiss. All the tools that I've shown you today are all included, not just the volume. So I was showing you previously all the volume tools. That's sufficient to help you to tackle that. But when you couple that with the other tools, you get the full arsenal behind you. So I just want to make sure I give that to you today. You get 14 days to try it out to see if you like it. All right. You get full access to our membership area. You get full access to our Wednesday and Thursday members only training. You get access to our Inner Circle Skype room. You get all the bonus indicators. I mean, that's just a cost right now. You're saving $345 because we waived the $197 activation fee and the $297 first month subscription, but we waive all that for you up front just to give you the trial. Okay, so I want to make sure you also get, because it is the professional package, you get access to our master class. That's a $4,000 value right there. I teach you 6 advanced lessons on trading using the Hawkeye tools. Okay, I give you access to all the Forex and crypto trading tools. So everything that we use in these markets, you get full access to those as well. Okay, you get access to the 6 ways the market moves. This is one of our most popular courses. It's asked for all the time. This is the one that gives everyone the aha moment. This is the one that says, it finally makes sense. This really does make sense. All right. I give you full access to our live workshop. This is our standard seminar that I do live every year. The last one was in Charlotte. This was recorded. People paid $1,600 for this. I'm giving you access to that for the 14-day trial. But once the 14 days are over, that goes down because there's a lot of really good information in this. Well worth the price, but you're getting access to it absolutely free. Okay, so what you get with the package, you get the full volume starter package, which includes the volume radar, paint bar, the pivots, and the white bar. You get the full Hawkeye starter package plus the standard package. So that standard package includes the trend and stops, the heat map, the profit accelerator, the levels, which is the level ATR levels and GRABA, and all the bonus indicators. Well, this is everything that you need to follow our three-step entry exit method, but on top of that, we throw in all of our advanced charting tools as well, which includes everything in the standard package I just mentioned, plus the Roadkill, the Fat Man, the Fat Boy, the KISS, all of our tool sets, our gear combo tools, which are revolutionary tools that help you to trade tick charts using standard time frame settings. And so it gets really clear. These little stars just say that the Fat Boy, KISS, tool set and gear combo, these tools are not available on the MetaTrader 4 platform. And the last two right here are not available on the TradingView platform. So that's the information that you see there. And Michael, you don't have access to load the tools on TradingView because they're already on TradingView. Our staff just needs to enable you on TradingView to pull those up. And so when you pull your TradingView platform up, then when you go to insert an indicator right here, go to the invite only scripts section. From that, then you'll be able to access all of the Hawkeye tools you've been accessed. So once our friendly support staff gets you loaded in and going, then you'll be able to access and see all of these tools right away. Oh, good. The trial is only available today. So, and it's only available for this investor inspiration class. So I've never made this available to anybody else. We have never, ever had free trials, ever. This is the very first time, and it's only to this investor inspirations class today, okay? So if you add all that up, that's about $6,500 in value. You get it today, but it's only available today. Okay, so if you do have questions, please contact us at team1hawkeyetraders.com. Once you go to the page, you'll find out that that page and the subscription trial really is only good for today. So if you're not around today, then you're going to miss out. Midnight tonight, it goes away. So you've got to act to get this. Otherwise, you'll just have to pay the regular market price for those. But I'm waiving this right now, and I'm giving you 14 days free. Otherwise, you don't get it for free for 14, and you have to pay the activation fee to get going on that, which are still worth it because we normally sell these things for a $3,000 package. This is a $3,000 package in the store, which is worth its weight in gold. Okay, but let's go back to some live examples again. Okay, Corinne, you never answered back, so I'm not going to worry about that for now. I'll load a NinjaTrader real quick, and it'll be loading in the background while I go through TradingView again. Please ask any questions now. This is the time to ask. After the trial, it goes back to the $297 price. I believe somewhere during the offer, you'll be offered a 50% discount, but that offer is only offered one time. If you don't take the offer the first time, then you lose it altogether and it'll continue to subscribe. I think you'll get a 50% offer somewhere during the process. But after that, it goes right back to the $297 per month price. Right. Yeah, if you don't sign up immediately, then you lose the 50%, right? So it's your choice. If I haven't sold you, then that's fine. I'm not trying to sell you. I'm trying to make this available to you and kind of show it to you. So do the best that I can. All right, here's the spider. It's the same as the S&P. It's just on intraday. About 3 o'clock in the afternoon, most of the markets have gone sideways and it has slowed down considerably. Yeah, the Qs. Facebook. Let's pull up Facebook just to see that. Ow, that had to hurt. That had to hurt. Ouch. Not if you were short. Were you short, Chris? What was volume telling you? Oh, look at that big red volume bar up there. Look at that. Hawkeye knew. Look at that. This one had 3 or 4 volume bars, red. This is a 30-minute chart showing big red volume bar coming into the close. 1 and 2. Somebody out there knew. That's right. My favorite, of course, is Amazon. Full disclaimer, I own Amazon. I own Apple. I own NVIDIA. If I show any more charts that I own, I'll make sure and let you know. This is a 5-minute setup. I prefer to look at a daily, weekly, monthly. So looking at a single daily chart, make sure if you change the time frame of your charts that you update your tools as well. So my supporting tools, my roadkill, I want to make sure that my roadkill inputs are set to match that. So on a daily, then I will also look at a weekly. Okay, on my heat map, I want to make sure I'm looking at the weekly heat map as well. And my second roadkill, I'm going to pull that up and look at a monthly. In this case, I don't have access to the monthly. I've got to load the other indicator in to pull up the monthly chart, and I'll be able to pull that in. So here you can see when the alignment occurs multiple time frames, then it gives you access to take those trades. Brian, any preference between TradeStation and NinjaTrader? I trade them both. I have most of my active accounts on TradeStation, and I have an active account on NinjaTrader. And I also have accounts at TD Ameritrade through Thinkorswim, but that's only for options trading. And I do all of my analysis on NinjaTrader, but I trade directly through the NinjaTrader platform on my TD Ameritrade account. All right, so Amazon's topping. See that? Price is starting to roll over. You're still in an upward trend, but it's starting to top. And you're still seeing very strong bullishness up into the $1,800 range. All right, Hawkeye's been strong and long on this for quite some time, but you can see that for a while that the market has, let me pull that up to a full screen. You can see that the market's been long for quite some time here. Okay. Very few times did it go into downward trend, but the upward trends have been strong and showing very good consolidation there. Depending upon what you like, TradeStation is right now it is a free platform. If you set up an account with them, NinjaTrader is a platform that costs a small amount to get going on it, but the data fees are a little expensive. So on both of them. I get by with about $40 a month on TradeStation for all the data that I want, and I pay about $15 a month on NinjaTrader for access to data through Dorman, who's my broker. So alignment shows entry points, consolidation shown by the red and white. You can see that the downward moves I'm just not taking because this is an upward market, and volume is clearly saying that the buyers are still firmly entrenched and in control of this market. You want to make sure that you're always trading on the side of volume on the longer term. So when you go down into the shorter time frame, so 4 hours, a very nice chart intraday, then 4-hour charts are good to set up. In this case, second time frame, I'm going to pull it back down into a daily. Okay, and then I'm going to put my heat map right here, also to a daily. And then I'll leave this one at a weekly so you can see relative performance from a 240, a daily and weekly alignment. Okay, so right here you've got really good alignment of all 3 time frames, really good volume supporting that coming into this move. It helps you to take this input much more confidently. The heat map is showing you the strength of the trend. So when the trend starts to change right here as it did rapidly, price came down really strong relative to the input bars, and you can see that right here. Okay, then you can see that the heat map changed color. It went right from a bright green to a bright red. All right, so the trend actually changed, and then it started to go back up and build. So you can see that that red wave started to go dark. Here's a dark red, and there's a dark green, showing that's building towards buying. And you can see that as the selling volume decreased, the buying volume started increasing, that the strength of that trend was building. And then when the trade started to take off, roadkill gave you the first signal, and then the second signal, which gave you confirmation that this trend was on, and you're back off to the races again. Heat map does not change color. Nope, it changes color only on signs of weakness. It doesn't repaint, or none of our indicators repaint at any time. The weekly is obviously slower, absolutely, but see, volume is a leading indicator. So volume will always show you the presence of buying or selling. See right here, weekly, you've got a lot of buying come back down here, and you can see on this 240 that this is a clear sign of buying coming into that. Okay. So, and then buying also returns back to the daily here. So yeah, weekly is definitely slower, but we take that into account. No, they cannot be seen on the Thinkorswim platform itself, no.